Hey everyone, and welcome back to the Tesla Stock Podcast. What's the price of pride? For Tesla, it might be about $183 million. A stunning new revelation in a landmark legal case has put the company's decision-making under a microscope. Just as it makes a major pivot in its AI strategy and faces a rapidly growing threat in China. With the stock surging to around the $350 mark, we have to unpack this costly gamble and what it means for the road ahead. Let's start with the bombshell legal news. You'll remember the recent autopilot wrongful death case in Florida, which resulted in the first-ever jury verdict against Tesla in such a case, a massive $243 million judgment. The case involved a 2019 crash where a driver was distracted and his Model S ran through a T intersection, causing a fatal accident. While the driver was found 67% responsible, the jury found Tesla 33% responsible and hit the company with an additional $200 million in punitive damages. Now, new legal documents reveal that back on May 30th, the plaintiffs offered to settle the entire case for $60 million. Tesla rejected that offer. They instead made a lower counteroffer that also included a non-disclosure agreement, which the plaintiffs rejected. If the original verdict holds up on appeal, this decision to reject the settlement will have cost Tesla an extra $183 million, plus potentially millions more in legal fees. This brings up Elon Musk's famous promise that Tesla will never settle an unjust case. On the surface, rejecting the settlement looks like a principled stand. The problem is, this claim doesn't really hold up to scrutiny. First, Tesla has settled numerous cases in the past, including other autopilot wrongful death cases. Second, the fact that they made a counteroffer themselves suggests this wasn't about a moral high ground, but rather a standard negotiation and a financial calculation. It appears Tesla simply miscalculated the risk, believed it would win, and lost the gamble in a very expensive way. It's a costly reminder that courtroom battles are unpredictable, and a public promise from the CEO doesn't always align with the company's legal strategy. Now, while that legal battle looks back at a past failure, Tesla is pushing forward with its future narrative. This week, the company announced a modest expansion of its supervised robo-taxi service in Austin. The service area has nearly doubled to 173 square miles, and the number of vehicles in the fleet has increased by 50% now. That likely means the fleet has only grown from about 10 cars to 15, and it's still an invite-only service with safety monitors inside, so this is very much incremental progress. But the bigger story for the future narrative is a major strategic pivot in the company's AI development. For years, we've heard about Tesla's in-house Dojo supercomputer, which was touted as the unique solution for training its self-driving models. Well, Tesla has now officially scrapped the Dojo project. The company is shifting its strategy to rely on outside suppliers, primarily the AI chip giant Nvidia, as well as AMD, for the massive computing power it needs. This is a huge development. It's a public admission that their own in-house solution was not the best path forward, and that they need to rely on the industry leader to achieve their goals. This is arguably a very smart and pragmatic decision, but it does represent a step back from the long-held narrative that Tesla's total vertical integration, from chips to software, was its ultimate competitive advantage. All eyes will now be on Nvidia's upcoming earnings report for any commentary on the scale of Tesla's new chip orders. And while Tesla pivots its long-term strategy, the short-term reality on the ground is getting tougher, especially in China. New insurance data reveals that the new Xiaomi YU7 electric SUV is already putting significant pressure on the Model Y, which has long been Tesla's cash cow. The data shows a clear inverse correlation. As weekly deliveries of the Xiaomi YU7 have ramped up to over 3,000 units, The weekly deliveries for the Tesla Model Y in China have been trending down. This isn't a surprise. It's a playbook we've already seen. Xiaomi's first EV, the SU7 sedan, has been consistently outselling the Model 3 for the better part of a year. Now, it looks like their SUV is having the exact same disruptive impact on the Model Y. Xiaomi made a strong start with over 200,000 pre-orders for the YU7. And as they ramp up production, the pressure on Tesla is only going to increase. For the last 5 years, Tesla enjoyed a dominant position in the Chinese market. That era appears to be over. They are now in a dogfight with a powerful, innovative, and aggressive local competitor that is systematically targeting their core products. So, to sum it all up, we have a costly legal blunder where a rejected $60 million settlement may end up costing the company nearly $250 million. We have a major strategic pivot in the company's AI efforts, with a new and open reliance on Nvidia after scrapping the in-house Dojo project. And we have hard, weekly data showing that a formidable new competitor is already successfully eating into the Model Y's sales in the critical Chinese market. This brings me to my question for you. What do you make of Tesla's decision to reject the settlement? Was it a principled stand that backfired, or a simple business miscalculation? And looking forward, what's the bigger story for the stock? The incremental progress on the long-term robotaxi narrative, or the very real and immediate competitive threat from companies like Xiaomi that is impacting sales today? Let me know your thoughts down in the comments section below. As always, if you found this breakdown valuable, please hit that like button, subscribe to the Tesla Stock Podcast, and be sure to turn on notifications so you never miss an update. Thanks for listening, and we'll see you next time.